Welcome to the Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. At the Lineweaver Financial Group of Companies, we help you coordinate all your financial, tax, legal, and insurance to help save you time, money, and worry. Today we have special guest Chad Roop with us. He is actually the lead analyst with Fundamentum, and he's also a chartered financial analyst, so welcome back to the show.
Glad to be back.
You know, we had you back in December at the end of 2018, which was a pretty volatile time. But right after the midterm elections, you really had some great predictions about the market, and a lot of them really came true. So what are you seeing today?
Well, I'm glad it worked out well for investors. A lot of the data around post-midterm equity returns tend to be quite bullish, but we certainly had to work through a period of volatility in December before realizing those gains.
Yeah, and we're kind of right in the middle of earnings season for 2019 with the second quarter and things. So what are you seeing?
It's funny how quickly sentiment changes. We go from the third worst fourth quarter in history at the end of 18 to the best start in 21 years. I think a lot of that's due to the Fed pivot, a very dovish pivot by the Fed, coupled with about $1 trillion in stimulus from China, physically and monetarily, as well as about 75% of U.S. companies reporting positive earnings surprises. So I think put all that together, it's been a recipe for strong equity returns.
And do you see these positive earnings momentum continuing?
If we look historically, there's been 22 times where companies, or where January, February, and March have all been positive. 20 of those 22 times, the next 9 months have led to positive gains. So I think that is quite positive.
Now, with the volatility that we're starting to see again, the yield curve actually back in March went inverted. So is that like caution on the radar? Or?
Yeah, for sure. I mean, historically, when we've gotten a yield curve inversion, an economic recession is followed about 15 months on average later. So that's troublesome. The good news is this one was very short-lived, only a few days after the Fed policy meeting, and then we got out of the inversion. But something definitely worth watching. Also worth watching, trade issues with China, Brexit, Britain exiting the Eurozone, as well as Germany, the fourth largest economy in the world, appearing maybe in or near recession. The good news is they've got plenty of fiscal stimulus to turn the direction there.
Well, I know our U.S. dollar has gotten stronger, which is kind of maybe hurting some of our global companies. But if you could come up with a prediction, again, looking back at your crystal ball for 2019, where would you see the S&P 500 ending up the year at?
Maybe we get a little bit more upside, maybe finishing the S&P 500 at 3,000 to 3,100, but probably some volatility between here and there. Probably good for investors to be patient, disciplined, don't get too caught up in the fear of missing out on the gains we've already realized.
That's great. Well, thanks for coming on the show again. A lot of great advice for investors out there. Appreciate you tuning in. Stay tuned for the Chris Wallace Show coming up next.